And now I will say something about financial management. Actually, in this stage, I will be talking a bit about project budget, how to prepare it, what is necessary, which financial information you should be providing to us, and somehow to have an overview of the financial aspects of a project. Okay. I wanted to ask, but yeah, apparently these microphones are a bit. So first of all, I would like to highlight 3 documents. One is the application form. We already had a presentation on the application form. The second is also application form, however, financial part of the application form. It contains financial information, primarily, actually, only financial information. And the third document is the implementation manual, which is a document prepared at the program level. First 2 documents, application form and application form, the Excel tables, contain financial information. So you are expected to enter the financial information into these 2 documents. Implementation manual contains rules and guidelines. Basically, it can tell you what should go under certain, let's say, budget category. Application form, the PDF document, contains limited financial information. Basically, it contains overall project budget. It contains budgets per activities and work packages. But it doesn't go into further analytics of the budget. Additionally, there is also financial information for investment and equipment have to be indicated in this application form. The second application form, the financial part, contains complete financial information. It is an Excel file with several sheets containing financial information structured in different ways. When we are talking about project budgeting, we are basically talking about different ways on how to structure financial information. So we are talking about which categories, what is included, like in a particular. You are splitting the overall amounts into certain analytical categories, and you can do it in several different ways. We can say that within our program, there are 3 main ways of how you're structuring this financial information. One is based on source of funding. The other is based on the work packages and budget lines. And the third one is based on the reporting periods. Sources of funding basically is saying where is the financing coming from. The project budget is not exclusively financed by, and the project activities are not exclusively financed by the Danube Transnational Program. We are covering 85% of the cost. Other 15% has to come from some other sources. 85% contribution provided by the Danube Transnational Program comes from 3 sources: from European Regional Development Fund, Instrument for Pre-Accession Assistance, and European Neighborhood Instrument. Whether you will be receiving funding, whether partners will be receiving funding from a particular instrument depends primarily on the location of a partner. If a partner is from a member state, they will receive money from the European Regional Development Fund. If the partner is from Serbia, Montenegro, or Bosnia and Herzegovina, they will be receiving the funds, they will be receiving money from Instrument for Pre-Accession Assistance. And if they are from Moldova or Ukraine, they will be receiving money from European Neighborhood Instrument. For ENI, it's still a bit in the red, as you can see on the slide, because there is still some conditionality linked to the ENI funds. Now, besides this 85%, the remaining 15% have to come from other sources. So when you see a budget table, you will see that you have to indicate which is the other source of financing for the project. So whether the financing is coming from state contribution, public contribution or private contribution. And it's possible also to have combination of these three for the remaining 15%. So possibly, depending on the country, you can have like state contribution and private contribution, state contribution and public contribution. Regarding the state contribution, I would recommend checking our website because we have an overview of the national co-financing systems. It means that in some countries, the state is giving either full 15% or a certain part of the financing to the project. So in case the project is approved, you might be in a situation where you are automatically granted certain amount of money, or if you have to fulfill some administrative requirements for it. So definitely, depending on which country you're coming from and the partners from which other partners from which countries they are coming from, this amount of state contribution would vary. Secondly, we have public contribution, which is usually, it might be institution dependent. So for example, if you're a public institution and you provide the 15% from your own resources, public resources, then you would indicate 15% of public contribution. Of course, it's not limited only to the funds of an institution that's applying, because at national level or different kinds of levels, you might have additional financing insured. So for example, maybe there is regional financing for a particular partner. They can get some regional financing for the project, which would also be counted as a public contribution. You can also have national public contribution, which is not the same as state contribution because it doesn't come automatically, but you might get something, let's say, from the ministry that decides that your project is worthwhile additionally financing. It's worthwhile to financing additionally. And we have private contribution. For example, if you're a private institution and you're going to give 15% of your own resources, you would probably indicate, in this case, you would indicate private contribution in this case. Of course, there are some exceptions whereby you can have like public institutions which have some private financing for the project, in which case it's like it can be also case dependent. In general, you have the public institution own financing would be public contribution. However, some public institutions might also have some private financing, and therefore they can have like they can have either a combination or specifically private financing for a particular project. Now, as I mentioned, there is another way of structuring financial information is through work packages and budget lines. Now, usually you would start with this when you're planning your budget. So you have planned certain activities, you have work packages, and within each of this work package, there are certain cost categories that are implied. It means that you would be spending money on a work package within a particular budget category. The budgets of the project partners in this case would give you the overall budget. So for example, if you have work package 1, you would have some costs related to this work package. Once you have these costs, they can be split into certain categories. We have defined categories in this regard, so there are basically there are six categories, 6 budget lines in the program. So, for example, you would have work package 1 split into 6 costs of the work package 1 split into 6 different categories. Budget lines in our programs are staff costs, office and administrative expenditure, travel and accommodation costs, external expertise and services costs, equipment expenditure, and infrastructure and works. So within each of the work packages, you need to structure the financial information within these budget lines, within these budget categories. Detailed overview of each of these categories will be provided by my colleague in a later presentation. Now I will provide some design information, basically design elements that are incorporated into the system, which are either set on EU level, they're either decided on the national level, or they are set by us at the program level. First of all, simplified cost options. Simplified cost options basically means that the costs have different way of how they are validated, in a sense that they are not going through the usual checks that are foreseen for other expenditure. So, for example, for preparation costs, we have a use of the lump sum, which means that once your project is approved, you would receive 85% of 17,500 euros. Staff costs, you have the possibility to use either the flat rate or the real cost method. Office and administration costs, you can use the 15% flat rate, which means that we are not going to look into the actual expenditure, but basically depending on your staff costs, we will automatically grant you 15%. Then involvement of associated strategic partners within each partner budget, financing partner budget. If you have ASPs, these costs have to be incorporated. So if a project partner has like 100,000 euros, and the ASP has 3,000, these 3,000 have to be incorporated into the overall budget of the financing partner. It's part of the sponsoring partner budget. So part of the financing partner's budget means their own budget for their own activities plus the ASPs. However, when indicating the total amounts per budget lines, you already have to include these ASP costs into your budgets. Control costs, they have to be planned under external expertise and services. It's a national level kind of design element, because each country has a different control system. In some systems, partners are expected to cover the costs of control by themselves. In some other countries, this is not so. So basically, at the central level, the control is performed, and the partners are not expected to cover any kind of costs. There is even a case where there is a centralized system, but you still have to pay the cost, even though the control is done on the central government level. Then equipment, investment, and works. This is one category that's basically also included in the general application form, where you have to indicate, well, you have to both describe this investment, and you have to indicate equipment items. Revenues, they are foreseen to be indicated in the application form. We don't expect projects with that much revenue. So usually there are rarely defined cases where projects have revenues. However, they have to be indicated in case they are present, because they have to be deducted from the overall budget, basically. And then the third way of structuring financial information is through per periods. It means that you're planning the project budget per a particular period for a particular partner. You somehow have to provide information for each of these periods, how much you would be spending. Spending forecast equals budget per reporting period in this case. Spending forecast given at the partner level will produce the project spending forecast. So as I mentioned, periods have to cover 6 months, starting from the month of the approval date of the project, with some small modifications depending on the starting date of the project and the end date of the project. They have to be planned carefully by each project partner, as the spending level per partner influences the overall project level spending. It should be in line with the time plan of the project, with the activities fulfilled within the reporting period. You have several categories, like expenditure incurred, expenditure paid, and validated expenditure. What you are providing is basically validated expenditure. It means expenditure that has been incurred, paid, and validated at national level. It means it has been checked. Yeah. And it should be realistic. So you should consider the time frame for each activity, be ambitious, but also be be rational and reasonable when estimating it. Especially, for example, I'm mentioning here public procurements because public procurements, depending on the complexity and the size, can put a burden on the project implementation in case the procurement is not done according to the plan. How important is the spending forecast for us? It's important enough that it is part of the subsidy contract signed by the lead applicant becoming lead partner. In case there is lower financial performance than was agreed between the program management bodies and the lead partner and the project partnership, we have the right to decommit the project and reduce the overall budget of the project. So these are basically the presentation of the three main ways of how financial information are structured within the program, within the second call. And I would just like to highlight that we use euro everywhere. So project budget is planned in euro, reporting is done in euro, and EU contribution will be transferred in euro. In case you have expenditure which are incurred in currency other than euro, they have to be basically converted into euro with a specific exchange rate. In our case, when it was submitted in the month when it was submitted to the controller.